Oh boy, did we get saved by the BLS jobs report and unemployment this last Friday as we rounded out the week. Interest rates finally had a couple of good days, and it felt like we got saved. We were on a 3 week kind of uptick for the last 3 weeks. We've gone up with interest rates, and we were finally able to kind of put our foot down, and we got some quality information coming from the BLS jobs report that might show some help when it comes to the interest rate market and honestly the real estate market going forward. Again, my name is Kadyn Nannini, loan officer here in Phoenix, Arizona. Thanks for watching yet another mortgage rate and news update this week, the second week of March, March 10th and 11th, combined little day here. Happy to dive into everything that happened this last week, some forecasts going forward, and to talk on any little facts that we're seeing in the market, and hopefully sharing that all with you today. So let's dive right in. The biggest news that came out earlier in the week was on Tuesday. Jerome Powell, the Fed chair, spoke, and he kind of held firm on all of the information that we've heard from him before. They're going to stay strong on their policy to stomp inflation. They want to get inflation down to 2%. We're currently sitting in the low sixes when it comes to inflation, and that number will soon be updated on Tuesday, this next Tuesday, March, what would it be? 14th, when we get the CPI report that comes in, the latest CPI report that shows the updated inflation rate year over year. But they are going to stay strong in stomping down inflation. If that means they need to raise interest rate hikes, or if they need to do it more heavy interest rate hikes each month. They're going to be basing this all off of the data and headlines they're getting from these BLS jobs reports, these CPI inflation reports. So we need to make sure this data and headlines and all the headlines line up to make sure that we are showing that the economy is slowing and contracting, so that we are able to show that interest rates can come down. And honestly, it sucks to say, when it comes to the real estate market, we're rooting for a recession in a way, because inflation has gotten out of hand, and we need to rein it in. So he held firm. Nothing new from Jerome Powell. It did mess with rates a little bit that day. Nothing crazy, but nothing new to expect from the Fed. Next, the two main pieces that happened this week were there was two different job reports or unemployment reports. First was the ADP employment report, and that came out on Wednesday. On Wednesday, we were expecting about 200,000 jobs created through that employment report. The number came out to 242,000. So more jobs created than expected. Rates did go up a little bit as investors were caught off guard by that number. But then we had our saving grace. Yet another employment report came out, the BLS jobs report, on Friday. And on that day, there was more jobs that were created than expected. But the saving grace was actually this. Unemployment ticked up from 3.4% to 3.6%. It was very much needed. That is a great stat to see on the side of interest rates. But what was tricky about that number is not so much that there's this mass layoff that's going on. I think it's a typical number of people being laid off or fired or anything like that. But the problem is, I think there's a hiring freeze, because if you're looking at the statistics and the data and talking about all of this, it's actually people are having a hard time finding jobs versus actually getting laid off from their current job. So it's almost like a bucket of people is starting to fill up because people aren't able to go find a new place of work. So I think that is how companies are handling a potential recession. Is there's a hiring freeze versus laying off the people they currently have. All in all, it was a great stat to see getting up from a 3.4 to a 3.6% unemployment rate. And then as for just mortgage activity, mortgage applications were actually up 6.6% this last week, even with rates ticking up. So that was very good to see. And a insane stat to share is about, of all mortgages, about 90% of them have interest rates below 5%. Below 5%. And of all of the mortgages, 70% are below 4%. There are so many people that have these low interest rates that may not want to give that up and may just sit in their home and not list. It was kind of along the lines of my forecast prediction last week. Insane to see. Rates are projected to only get to like 5.5. So we're not even going to get to rates aren't going to even get below that 90% of people. It's crazy to think about. You can come up with your own ideas and projections based off of that. But boy, it's going to be an interesting time when it comes to housing. Like I said, going into the next week, we have our very important CPI inflation report happening on Tuesday. It'll be great to see if we can combine that with this great BLS jobs report that happened on Friday. with an inflation number that is below expected, it would do wonders for interest rates and really start to drive those down as we start to gather a few months under our belt. But overall, and then lastly, overall interest rate movement. Interest rates fell maybe about 0.1% to about 0.25%. So a little bit of movement. It was just nice to see after us going up over the last 3 straight weeks. But that is all I have for you today. Again, as always, I would love if you could like and hit subscribe on my channel, hit like on this video, so that we can get broadcast out to more people, more information being driven out to people, accurate information on the housing market. If you have any questions, drop them in the comments below, or you can always feel free to shoot me an email directly. That information will be below as well. Thank you again for tuning in, listening, and I hope to see you all next week.